Hello, and welcome to the forum. Every week, we take no more than 5 minutes to discuss 3 highest conviction ideas surfaced across the Smartkarma network, cutting through the noise and helping you zero in on what truly matters most. Without further ado, let's dive into this week's ideas. Good evening, ladies and gentlemen, and welcome to the Smartkarma Forum. The forum is a high-impact weekly live webinar exclusive for Smartkarma Plus subscribers, where we use the forum to discuss the best, highest conviction insights surfaced across the Smartkarma network. The forum is meant purely for informational purposes and does not constitute investment advice. It is the opinion not of Smartkarma, but that of our insight providers, and Chatham House rule applies. At the end of every week, we take video recordings of the forum and convert them into short bite-sized pieces and upload them onto our YouTube channel to make it easy for you to revisit ideas at your own time and pace. This also makes it easier for you to share these ideas with your friends and get their feedback. Every week, we try to bring you a range of ideas from large caps, small and mid caps, as well as core thematics. Today, we'll begin by looking at Shangri-La Asia, then we will move on to China Longyuan, and lastly, we will take a look at the growing US deficit and why it is likely going to lead to lower interest rates. Let's begin with Shangri-La Asia. The ticker is 69 Hong Kong, and this is covered by Osbert Tang on the Smartkarma platform. Shangri-La Asia owns and operates hotels. It also leases offices, commercial, residential, and exhibition hall space. They have not yet fully reflected the strengths of and benefits from China's reopening. More upside to come. Expect massive rebound in profitability due to a surge in occupancy, as well as China's revenue generated per room in the year of 2022 is negative 56.5%. Share of China's EBITDA was $258 million US in FY22 from $465 million US in FY 2016 to 2019. This suggests good room for recovery. It is cheap on around 70% discount to revalued NAV versus 37% in FY18. Next, we have China Longyuan, and the ticker is 916 Hong Kong, and this is covered by Osbert Tang. China Longyuan designs and operates wind farms. They also provide thermal power, solar power, tidal power, etc. Its weak share price year to date due to poor FY22 results and moderate first quarter 23 generation growth based on 5.5 to 6.5 gigawatt plant capacity expansion in FY23. Expect a solid growth of 17.7 to 20.9% year on year. Coupled with efficiency improvement, we expect a sharp rebound in FY23 profit. With reversal of exchange and trading losses, expect a swing in bottom line and improvement in cash flow. Lastly, we will take a look at the growing US deficit and why it is likely going to lead to lower interest rates. This is an insight covered by Andreas Steno. Andreas models the unemployment rate and ISM composite growth against the federal budget. The model reveals a nearly 7% GDP gap. Individual tax refunds issued through March 2023 were 3% greater than the same period in 2022. A debt ceiling deal hence risks being the trigger for less bank liquidity, further deposit flights, and USD liquidity. If you found the forum useful but have follow-up questions, please feel free to continue the conversation on Smartkarma. We hope to speak to you next week, and until then, all the best and goodbye. That's it for this week. You can find more ideas like the ones we discussed today on demand on our YouTube channel. Remember to subscribe and hit the notification button so you'll never miss out on another episode. If you liked these ideas, spread the word. Tell a fellow investor about Smartkarma Plus and follow us on social media. Just search for Smartkarma. And of course, don't forget to visit smartkarma.com for more independent, differentiated investment insights. Thank you for watching and see you next week.